Have you ever wondered how a bank can get $50,000 approved instantly? It may seem like magic, but it's actually a culmination of several factors that have revolutionized the banking industry. In the not-so-distant past, getting a loan approval was a long and arduous process. You'd have to wait for days, sometimes even weeks, just to hear whether you've been approved or not. But today, within a few clicks and a matter of seconds, you could have $50,000 approved. It's almost like magic, isn't it? Well, it's not magic, but technology and policy changes that have made this possible. The banking industry has seen an impressive evolution in the last few decades. Advancements in technology have been a significant driving force behind this transformation, enabling banks to process loan applications and approve them in real time. But it's not just the technology that's responsible. Changes in banking policies have also played a crucial role. Banks have become more customer-centric, focusing on providing a seamless and efficient service. This shift in approach has led to the development of policies that favor quick and easy loan approvals. And let's not forget the role of competition. In today's fast-paced world, banks are under constant pressure to outdo each other. This competition has led to innovative solutions, one of which is the instant approval of loans. But as fascinating as it may seem, there's a lot more to instant approvals than meets the eye. Behind the scenes, numerous factors come into play, and a complex mechanism is at work. Stay tuned as we delve deeper into the mechanisms that make instant approvals possible. In a world where time is money, technology is proving to be a game changer. Imagine the days when applying for a bank loan involved stacks of paperwork, lengthy waiting periods, and nerve-wracking meetings with bank officials. Thankfully, those days are now a thing of the past, thanks to technology. Banks have started leveraging the power of technology to streamline the loan approval process, making it efficient, quick, and hassle-free. At the heart of this transformation are algorithms and data analysis. These terms might sound technical, but essentially they represent a set of rules and methods used by computers to solve problems and make decisions. In the context of instant loan approvals, banks use algorithms to assess an applicant's creditworthiness. This means that the computer system evaluates your financial status, income, existing debts, and other relevant factors to determine if you are capable of repaying the loan. And this isn't a process that takes days or weeks. It's done almost instantly. The moment you hit the submit button on your loan application, these algorithms get to work. They sift through a sea of data, analyzing and interpreting it to make a decision. But the role of technology doesn't end there. Once your loan is approved, technology also plays a crucial role in the disbursement of funds. Digital payment systems ensure that the approved loan amount is transferred to your bank account without any delay. So what does this mean for you, the customer? It means that you can apply for a loan from the comfort of your home or office, without having to step foot into a bank. It means that you can get an instant decision on your loan application without having to wait for days or weeks. In short, technology has revolutionized the way banks operate and offer services to their customers. It has made the loan approval process faster, easier, and more transparent. With technology, banks have made the impossible possible. Your past dealings with credit play a significant role in your present financial opportunities. It's as if your financial life is a storybook, and your credit history is the narrative that lenders read to understand your money habits. Let's delve a little deeper into this. Picture your credit history as a comprehensive report card of your financial behavior. It's a record of your past borrowings, how promptly you've repaid them, and whether you've defaulted on any loans. It also captures your credit card usage patterns, shedding light on how responsibly you've managed your credit limit. Banks and financial institutions use your credit score, a numerical representation of your credit history, as a primary tool to assess your creditworthiness. A high credit score indicates a history of timely repayments and responsible credit management, making you a desirable candidate for loan approvals. On the other hand, a low score could signal potential red flags to lenders. So, how does this tie into instant loan approvals? Well, in the digital age, banks can access and analyze your credit history in a matter of seconds. This quick evaluation allows them to make instant decisions about your loan application. If your credit history is strong, you're more likely to receive that instant approval you're hoping for. But it's important to remember that your credit history isn't just about getting loans. It can impact other aspects of your life too. It can influence the interest rates you're offered, the insurance premiums you pay, and sometimes even your employment opportunities. So, maintaining a good credit history isn't just about that instant loan approval. It's about setting yourself up for a healthy financial future. In essence, your credit history serves as a reflection of your financial trustworthiness. It's the key that can unlock numerous financial opportunities, from instant loan approvals to favorable interest rates. Your credit history is a window to your financial behavior, and banks use it as a guide. So, make sure your story is one that lenders want to read. As with every financial decision, there are risks involved. Diving headfirst into the world of instant loan approvals can be as thrilling as it is daunting. On one side, you have the allure of instant gratification, the promise of funds at your fingertips in a flash. But on the flip side, there's the somber reality of risk, a shadow that looms large over both the bank and the customer. For banks, the risk lies in the uncertainty. The speed of instant approvals means there's little time to delve deep into a customer's financial background. Yet, they've devised clever ways to mitigate these risks. They rely heavily on technology, using complex algorithms to rapidly assess credit scores, repayment histories, and more. They also set certain limitations on the amount that can be instantly approved, a safety net of sorts to protect themselves from significant losses. But what about the customers? Well, for them, the risks are slightly different. The allure of instant money can sometimes blindside the most prudent among us. It's easy to overlook the fine print, the interest rates, and the repayment terms when you're fixated on the dollar signs flashing before your eyes. That's why it's crucial to approach instant approvals with a healthy dose of skepticism and caution. Remember, it's not just about getting the money, it's also about being able to repay it comfortably. It's about understanding the terms, the fees, the interest rates. It's about knowing what you're getting into, so you're not caught off guard when the first repayment date rolls around. And let's not forget the threat of fraud. In this digital age, scammers are always on the prowl, ready to exploit any vulnerability. So, while banks do their part in securing their systems, customers too need to be vigilant. Always ensure you're dealing with reputable financial institutions and protect your personal information at all costs. Instant approvals come with their own set of risks, but with careful planning, they can be managed. It's a delicate dance between risk and reward, but with the right steps, you can make the most of the opportunities while keeping the risks at bay. As we look to the future, the landscape of instant approvals is set to evolve. Imagine a world where artificial intelligence and machine learning take the reins, streamlining the process of instant approvals even further. The technological advancements we've seen in the past few years are only the tip of the iceberg. As these technologies continue to evolve, they will play an increasingly pivotal role in the realm of instant approvals. In the not-too-distant future, we might see even more sophisticated AI algorithms that can analyze an individual's financial history in mere seconds, making instant loan approvals faster and more accurate. By harnessing the power of big data, these algorithms could take into account a wider range of factors, from an applicant's spending habits to their online behavior, providing a more comprehensive picture of their creditworthiness. And let's not forget about the potential changes in banking regulations. As governments and regulatory bodies around the world adapt to the changing financial landscape, we could see new rules and guidelines that will further facilitate the process of instant approvals. These changes could pave the way for a faster, smoother, and more secure loan approval process, benefiting both banks and their customers. But with these advancements and changes come new challenges. The future of instant approvals will require a delicate balance between speed and security, convenience and privacy. Banks will need to ensure that their systems are not only fast and efficient, but also secure and privacy-conscious. After all, in an era where data breaches and cyber attacks are becoming increasingly common, the importance of security cannot be overstated. In the world of instant approvals, the possibilities are endless. From AI-powered loan approval systems to new and improved banking regulations, the future looks bright. But one thing is certain, the future of instant approvals is not set in stone. It will be shaped by the continuous advancements in technology and the ever-changing landscape of banking regulations. In the world of banking, the only constant is change.